Along the lines of its peers ACC as well as Ultratech, Ambuja Cement too managed to deliver a very handsome beat across most of the analyst polls going into the quarter gone by as far as the results were concerned. The company once again displayed quite a bit of resilience when it came to strong volume offtake and also very strong realization trends, that is strong pricing power. When you're talking about the results of the company, the net sales jumped up almost 56%, aided by the fact that volumes went up 53%, coming in at 6.42 million tons. Clearly indicating that despite the lockdowns, most of the cement companies managed to continue their operations and have seen a very strong year-on-year growth. However, sequentially volumes across the cement universe expected to have dipped, and they have dipped, although not to the extent to which analysts on the street were predicting. When they're talking about the core EBITDA jumped up almost 61%, coming in close to the 960 crore mark. When they're talking about the margins jumping up, despite the fact that most of the companies have actually struggled to go ahead and maintain cost controls, given the fact that coal, petcoke as well as diesel prices are on an upswing, clearly indicating that especially for Ambuja and ACC, the master supply agreement, the various cost control initiatives that have been initiated by Lafarge Holcim are clearly working and are improving the operating margins of the entire both ACC as well as Ambuja. When you're talking about the power and fuel costs, up almost 24%, raw material costs up almost 32%. Most of the brokerages have continued to maintain a positive stance. A few brokerages, however, have highlighted that the stock has seen a significant run up, and that is something that would now indicate that the company would have to do a lot more in terms of capacity expansion in order to see further outperformance even from this point of time. However, Goldman Sachs has maintained a buy, increased the target price to 423. They're saying that the solid top line as well as sustained cost improvements were seen by Ambuja Cement. Continue to like Ambuja Cement's exposure to North as well as West India markets, clearly indicating that the company's presence in crucial geographical regions across India is something that would aid the performance going forward. JP Morgan has maintained a neutral, kept the target price at 350 a share, saying strong operating performance by the company. A 1.5 MT expansion that has been announced was something that's quite important. Similar to ACC and Ultratech, Ambuja too managed to deliver a beat at the operating level driven by volumes. Pricing stability in a seasonally weak period is something that they say is a significant positive. Ambuja has managed to outperform most cement listed companies on a YTD basis, clearly indicating that Ambuja Cement, the market has been looking at Ambuja Cement and has been rewarding the fact that the company has gone ahead for so many initiatives and thereby reducing the valuation gap between itself and larger listed peers like both the Ultratech Cement as well as Shree Cement.